So 20-second recap on what a sweep zone is. It's essentially another filter that we are using that potentially indicates that a supply or demand zone was created by institutional involvement, big money involvement, because the theory is that they've likely used the available sell side liquidity below that low to enter their long positions that then leads to that break of structure, or likewise using the buy side liquidity above those highs to use as liquidity to enter their short positions to enter the market. Okay, so let's go and look at what these look like on an actual chart. Did get some requests to look at pairs other than euro dollar, which is fair enough, right? Just to show you, how these concepts are universal and can be applied to any instrument or asset class. So let's kind of just zoom in to the recent PA price action. And what we're going to do is, like I said before, at this stage of this module, we're just going to be focusing on identifying and sort of defining those individual concepts on their own. So I'm just going to look at some examples of sweep zones. We'll talk a little bit about how it's developing with price action, but for the most part, I'm not going to be getting too stuck into how we're analyzing everything together with all of the concepts and thinking about trade ideas and forecasting where price is going to go. We'll leave that for a little bit later in the module. For now, I don't want all of these lessons to turn into 30 or 40 minute walkthroughs. I just want us to get good at identifying them, and then towards the end, right, we'll put it all together and we'll spend a lot more time kind of really walking through price slowly and using bar replay and all that fun stuff. So what we'll do is we'll kind of go from here and we'll go through sort of recent price examples to where we are. Now, one thing I'll say as well, I'll just zoom out on probably to a weekly chart on pound dollar, that when you get these sort of major breaks of monthly and weekly lows, right? And we can see that price ends up having these big pullbacks up towards a strong high. And then again, we get another big, massive, basically break of that low, and you get these sharp movements. Very often the sort of nearest structural high can be quite far away when you're trading down here. So like, for instance, it might be a bit more clear on the daily, like the last real sort of clear swing pullback is all the way up there. So for all of this time when price is trading here, yes, you can look at that as your strong daily high, but typically what I would advise is just kind of focus on the more recent price action and like follow this, just because you've got such a massive swing range that, if you're trying to short every supply here, a lot of times, price is just going to react. It's just a catalyst for a pullback, right, to push up higher. Again, we'll talk about this a lot more when we come to internal and external range liquidity, but just because when I go through this, it will make a bit more sense as to why I'm going to start mapping structure, right, looking from within here. Even though, yes, I know that the last swing high is probably all the way up here. When you get these big, massive sell-offs, sweep of the low, I'm basically going to start mapping my internal structure from here and just focusing on this, because otherwise if you're just waiting to short from all of these supply zones, a lot of the time you are going to get smashed. So we kind of look down here and just start mapping that internal structure on the 4-hour chart. And we can see we had this break here. Now, what happened when we led to that break? Obviously, we have demand zones that came in to lead to that break of structure. But what do you notice? We have price come down, it pulls back up, right? And then it grabs the liquidity below that low, right? We get a sweep of liquidity, and then that fuels the move there to the upside. So let's just draw these on. Okay, and then it's quite a big candle, so it's a bit of a messy zone, but essentially you get that large sell to buy candle with the next candle closing above it, right? Price taps into that, and then that leads to the move that then breaks structure. And then even on a smaller scale here, you see what happens. Price comes in, it pulls back, it breaks the high, right? So we know there'll be liquidity below that low. And what does price do? It comes down, grabs the liquidity, and fuels the next move to the upside. So you have another sweep zone there. Okay. Bit of a tricky one this to draw, because sometimes when you get kind of price action like that, I kind of like to include the wick as well, and I kind of just take that whole range. We get a bit of a reaction, but ultimately it ends up failing, and we come a little bit lower. We end up tapping into the previous internal demand range here, as we can see, and then we continue there to the upside. But as we pull back, all right, so at this point, this would be your sort of larger internal high that you'll be focusing on at that time. What happens when we form the strong low? Well, as you can see, as we're pulling back, get that fractal structure, this low breaks the high. Okay, so we know that that becomes somewhat of a strong low because it actually broke some structure this low here. So we know that would be a fair amount of liquidity building below that low, sell side liquidity, right? Enticing early buyers into the market. Price then comes down, grabs that liquidity, and now it has the fuel to make that big move, right? So the theory would be that low gets put into the market, enticing early buyers into the market, generating more sell-side liquidity. And now let's say the big guys can step in and they can use that sell-side liquidity to enter their long positions. And now there's enough juice to fuel that movement to the upside. Okay, so we get another sweep zone here where we sweep the lows there. And then we move to the upside. And as we can see within that overall move, we also get a flip. So we get the reaction from supply, and we can refine that to the pivot candle in which price comes down to, right? That's where demand really regained control from supply, and we move there to the upside. And even you can see here, right back here, when this initial sweep happens, then we flip, and then we come up, we have a bit of a pullback, and we go higher. And what happens? That generates more liquidity below that strong low, right? That broke that high, and then price comes down. We get even more equal lows here, right? Another bounce, just enticing more market participants into the market, generating more sell-side liquidity. And then we get that liquidation into the flip here. And then now we have the fuel to make that movement to the upside, right? So you just get another big sweep POI here, right? And then eventually that leads to the move that breaks structure to the upside. And then again, we come down to this strong low here. So hopefully you can start to see a bit of a common theme when the pro sort of trend moves, pro order flow moves. Very often those strong lows when we're bullish will form through a sweep of liquidity. Okay, so like, I don't know why that disappeared. I must have moved up, deleted it, but there, we initially had that sweep here, right? So very often what you'll see is price will move to the upside. You kind of get those corrective low resistance highs. Price will come down, and then as it's sort of starting to make that what we think is going to be the higher low, very often price will come down, then grab the liquidity, and now we have the fuel to the upside, and then we get the break of structure. And then likewise, we sort of get those corrective moves down. All right, we might build some equals, and we'll get a sweep of those potentially into the sweep POI here at the previous strong low. And then we'll have the fuel, right, as we liquidate those lows to get to the upside, right? And those low resistance highs there, that basically leaves liquidity to target, available liquidity to target at the high. And then same cycle repeats, right? We'll come down. Obviously, it can all happen in slightly different ways. You get a break of the high there, generate strong liquidity below that low. We come into the previous sweep zone, and then we go. So that's why, you know, when you've got sort of descending highs like that haven't swept any liquidity, that's where we say there's resting available liquidity above those highs there. It's low resistance. So when price is coming up, it's easy for price to target those highs, right? There's liquidity to target. But when price is pulling back down into our strong structural low, this is where we have, you know, that sort of high resistance liquidity low that formed, it swept liquidity. It's got strong demand zones that took liquidity that led to the break of structure. And that's why, you know, we have those protected ranges, and very often price won't break it, and we'll continue to the upside and target that low resistance available liquidity at the top, right? So you can see kind of what I'm saying here is we come up, we pull back, sweep liquidity, strong movement to the upside, right? Again, we have that pullback, get that low there, sweep liquidity, and then eventually we go, come up, generate more liquidity, sweep the liquidity, and then we go. And that will happen, you know, even on a smaller scale. Like when we come into this low down here, right, that sweep POI that swept the liquidity below that low, we initially tap into it. It's a bit of a tricky one to see on this time frame, but we come in, what do? We move to the upside, and then price comes down, and it just grabs liquidity just below that low. It just breaks it by a few pips, right? And now the movement is ready to go, and you get another sweep zone created there. Now this one's even a bit more subtle to see. Do we flip this range? Yeah, we do. So we come into the supply, but what happens if you look at how those candles would have formed, right? Price reacts, it comes down, it pulls up, and then what does it do? It comes down and grabs the liquidity below that low. Yes, it's just a weak low, right? It didn't break any structure on this time frame, but remember, for sweep zones, we don't need it to sweep strong structure. It can sweep a low like that, and for me, that's still valid. I find it higher probability, and I prefer it when it sweeps a low that actually, you know, clearly broke structure, and even with the candle body close, like that's brilliant when that happens. And you can see when price came back, super strong reaction. Okay, but for me, this still meets the criteria, and this is a flip that swept liquidity. So yeah, spoiler alert for the next lesson coming up, but this is a perfect example of that, right? So we had the reaction from supply, we pushed the upside, but what did the reaction do? It swept liquidity, okay? It came down, it came up, grabbed the liquidity below that low. So the theory is, right, it signals more institutional involvement using the liquidity that would have been available below that low to enter their long positions to then overpower supply and continue the movement. So what do you have? You have a flip that swept liquidity, okay? So now obviously you can draw your flip from the top of the reaction to the bottom of the reaction, which we come back into. Of course, you can refine it to the pivot zone as well. And again, rinse and repeat, right? What do we have? We try and take out the high at that point, right? That would be your range high. Zoom out a little bit, right? You can see the bullish structure forming overall, right? You can see this larger internal structure. We pull back, larger range here, right? So that would have been your low. Okay, so there was always potential, right? You know, price might have wanted to come down and mitigate something within that wick. But if you actually look, right, that's where liquidity was taken. That's where you had that true kind of last interaction between supply and demand. Then we got the sweep of all of this liquidity here, right? So we're following the money. That was the last big injection of demand. So although price could have come down to the strong low, there's pretty good reason to believe why this might be the next POI where the next swing low is going to form, right? To come to the upside. So we can look for 4-hour continuations within here, right? We can look on the lower time frames and try and get involved. And then we get that next interaction here that sweeps liquidity. So we know there's probably going to be somewhat of a, you know, a protected low within that range. And then again, what happens? Entices early buyers into the market. They get liquidated. And then we come into that last level there and then we go. Okay. So, you know, this is somewhat of a sweep POI again. It's a little bit far away. It's kind of what I was saying, right? In terms of, so if I draw it on first, you know, to say whether or not, you know, you can classify this particular POI I'm drawing on now as an actual sweep zone, because obviously, you know, I'd like to get it to be pretty near like that. But yeah, it meets, you know, the general criteria, right? There was liquidity below there. Liquidity was potentially used in line with this demand, right? Using all of that sell side liquidity to enter long positions here to buy against those sellers to then generate that movement there to the upside. And obviously when, you know, trending markets are strong, they're not always going to pull all the way back. Do we have any sweep zones in here? Let's have a look. So price comes in, we pull up, right? And then we come down. So we grab the liquidity below that low and that fuels the movement there to the upside. Okay, so hopefully you can sort of see with your eyes now, you know, what we're looking for. Some are obviously a lot more, let's say, significant than others, right? When we have like the big liquidations back here, following the demand chain into the flip, well priced, right? We can start to add in a lot more stuff, but kind of just at this point, like I said, just trying to like sort of identify the bare minimum definition of what one is. This one's a bit messy to sort of draw, right? But you do have, that's kind of being the cleanest zone. Price won't always come in and kind of perfectly mitigate that. Sometimes when you get sort of, you know, quote unquote messy price action like this, I will obviously draw it on the nice refined pivot range like that. And I did, it's, you know, super nice when price perfectly mitigates that. But sometimes you can kind of read between the lines a little bit and like, you know, I'd want to cover that wick. Some of you may even potentially want to take the larger range, right? But yeah, obviously as price pushes into the zone, you can refine it a little bit and then look on the lower time frames for your confirmations. And again, another sweep of that low as we came in to that POI, right? Now this movement here fails to break structure on this time frame. So this wouldn't, this here wouldn't be like a valid 4-hour POI, but you can still see the idea of what's happening here, right? It swept that low, demand came into the market and we've come off it, okay? Let's kind of move along a little bit. So, you know, we just keep getting those larger breaks of structure, just following that bullish order flow. Okay, at this time we come into, I think this is a flip. So we have this level of demand here. Okay, didn't sweep any liquidity. So this is not what I would call a sweep POI because, let's have a look at it. All right, if you look at the fractal structure, we come up, we pull back, and then all of those candles break the previous candle's high, then we pull back, and then we go. Okay, so if you look at that, it's just an up movement, down movement, up movement, down movement, up movement. So we don't sweep any, you know, actual low. Like for there to be a sweep zone, it would have had to sweep that low there, right? It would have had to come down, grab that low, and go. So it would have had to sweep this. If that had done that and gone like that, then I would call it a sweep zone. Because for me, or at least at the time of recording, I want to see like an actual, you know, a minimum of like a fractal low that needs to be taken. Now, some people, they will look at like the wicks of the candles and they will say, you know, price came down, grab the liquidity below that low there. And that's for them. Now, on a lower time frame, that's probably what would happen, because on a lower time frame, how would that look? It would look like a down movement, an up movement, right? And then price is taking the low. On a lower time frame, you go down to maybe the 15-minute. But on this time frame, think about it the way that we look at fractal structure. What happened? All of those candles broke the previous candle's high, then we pull back, and then we went. So for me, there's no sweep on this time frame. But some people, when they're defining sweep zones, you know, especially with flips as well, they will see that as a valid sweep, okay? So I'm not saying one is invalid or valid. I'm just saying the way I would recommend you guys do it when you're starting out is the way I'm saying now is you want to see it to be an actual low on this time frame, okay? So that would be the low that would have to get swept, because in theory, that should be more significant, right? Because it's an actual structural low in this time frame. Okay, so I would start with that as your starting point, and as you get more experienced, or you collect more data, but you're then happy to see a sweep zone like that, where you can see that on a lower time frame, that would be a sweep. You may want to include that, okay? Because some people do that with their trading. But hopefully I made it clear. I'd recommend you start with the more conservative approach, which is wait for an actual low in this time frame to be swept. That would be sort of my recommendation. Let's speed this up a little bit because I don't think this needs to be a super long video. But yeah, we'll just do a few more sort of obvious examples, right? Again, we pull back. What do? We mitigate that flip, right? So this is where we had that initial interaction from here. Okay, it's a little bit messy, but there we go. You can see where demand took control from supply, led to the break of structure, and we pull back. What do? We build some nice equal lows, okay? And then you see that's that aggressive nature that I was talking about. You kind of get that corrective, and then boom, big money is potentially using the sell side liquidity to enter their long positions to then generate the next move to the upside. And that's what I was saying at the start, right? You kind of get these move up, you get this sort of low resistance, right? All of that liquidity building up behind those highs because none of it's been really swept. I mean, there was a bit of a sweep in here, okay? So that would be, and you can see, right, that POI gets respected because we come down, have a bit of a fractal pullback, grab the liquidity behind that high. So that would have been a potentially good, nice counter trend area to look to get involved on lower time frames, right? Price comes into that 4-hour POI, that swept liquidity, and then we can look for a quick counter trend play down into demand, okay? But you see behind that, now you've got all of that available liquidity that's been untapped, and that's the liquidity to target, okay? So typically, like I was trying to say there, is what you get is price will break structure, okay? Like that, and then you get kind of usually these corrective moves, which we can trade to this downside, but it leaves that liquidity for us to target, and then price will generally come in, either form equal lows like this, sweep into the previous protected low, and then we get the movement, or like similar thing, corrective move down, and then we'll get like a low that breaks a high. That's the low that then gets swept, and then we go. That's very, very typically what will happen, and then that becomes a much more sort of protected low. Why? Because it signals that big money was involved in there, so they potentially have the intention to try and protect price trading below that low now. Again, what do we have? Price comes in, comes up, grabs liquidity below that low, and then we go. But eventually, we end up sweeping that low, right? More equals, and then we go again. And then we get another break of structure. And then obviously at some point, right, you could be using multi-time frame analysis. We've probably come up into a big daily level, up and towards or sweeping these highs. There's probably like a daily POI up here, right? And we start to shift a bit of structure to the downside, okay? So not getting too much, like I said, into trade ideas. It's more just kind of generally spotting how these sweep zone forms and how those protected swing ranges form right below, as I've kind of gone over. And yeah, we end up actually, you can see, on a bigger scale, we come into this low down here. We build some nice equals, enticing more traders into the market to generate more sell side liquidity below those lows. There we go, trying to draw the poorly drawn dollar sign, sweep that liquidity, and then we go, right, even on scale there. So you've got a nice POI, sweep POI, strong movement there to the upside as all of that sell side liquidity is used, and then almost bring us to where we are. What do we have? See how it just keeps happening now. We come in, we come up, grab the liquidity below that low, then we get a break of structure here, and then this one happens quite quickly. It's probably news or something, but you can see as we break this high here, right, it happens almost in the next, basically straight away in the next candle, but you would have had, right, this breaks the high, so there would be decent liquidity below that low, and price literally comes down, grabs it, not by much, but you literally grabs the liquidity behind that high, and then fuels the next movement to the upside, right? So that was a super quick sweep of that low. After that low had already been swept there. And then we get another mini one here. So price comes down, pulls up, comes down, sweeps the liquidity below that low, another break of structure to the upside. That then becomes your next sweep POI. Now with those sweep POIs, for like the ones where you get, so price comes in and then you get like a break of a high there, and then you sweep what we call like the strong low, right? That I love POIs that do that. They don't have to. Remember I said with sweep zones, it can just sweep weak structure. So you can also have the example where, let me zoom out a little bit. Okay, let me just go back here. It's easier to show. Here, right? So that's a sweep of a weak low. That's a sweep of a strong low, right? Actually broke structure. So both of those are valid. I just prefer one that sweeps strong structure because arguably more sell side or more liquidity, right, has built below that low to break that high. So in theory, that should be a better zone. So for that low to kind of what I would deem to be somewhat strong, like this low here, right? So we pull in, we come down, we come up, and that just breaks the high. So are we saying this is a strong low that then gets swept? I would prefer it to be one that actually does cause a body closure, okay? But wick break will take it. It's better than not having it. So we get a sweep at that level, come back into the sweep POI, and that would be a level there. And then that pretty much brings us to where we are. I don't know if there's any sort of more clean, obvious examples. But yeah, so hopefully you can kind of get the idea of just what we're looking for. I don't think it's anything too complicated. It's just what we usually do is we just look for those zones as we have been before that lead to a break of structure. You draw it on, you draw the analysis where market structure is it well priced? And then if you just want to ask yourself, is it a sweep zone? Just look left, and did it sweep any available nearby liquidity in the formation of that zone? And it can be another tick in the box as to why this should be an institutional zone, and likely will be a